What's going on, guys? It's Investing Hustler here, and today we're going to be talking about Uber finally filing for IPO under the New York Stock Exchange, and they will be listed under the ticker symbol UBER, which shouldn't be a surprise to anyone. Now, I'm going to be playing a clip from CNBC where they will be talking about Uber and their IPO, and they'll be giving you lots of new information, and I'll be ending it with an interview with the Uber CEO. They're going to be talking about Uber being on track for the IPO in 2019. But before we get this video started, don't forget to leave me a thumbs up. And if you're new to this channel, don't forget to subscribe.
They have revealed the prospectus confirming the banks underwriting the deal. The exchange listed Morgan Stanley, Goldman Sachs leading this one. They will list on the New York Stock Exchange under the symbol UBER. They have listed with a placeholder amount of about $1 billion, but a source close to the company says that the offering size will be closer to $10 billion by the time they go public. They also disclosed some financials for 2018, which they have disclosed in the past, similar to those. They said that they reported about $11.3 billion in 2018, which is up quite substantially from the $8 billion that they reported last year in 2017, 2 years ago. Losses from operations about $3 billion, which has narrowed from the $4 billion they reported in 2017. Now, we're looking at hundreds of pages of this prospectus that we will be speed reading and fill you in on all the nuggets that are disclosed here, guys.
Deirdre, I guess the key difference there from Lyft, just based on what Leslie just said, is that the loss is narrowing, not widening.
Yeah, that's a good point. But I would also say that revenue, we're seeing it at $11.3 billion. And remember that Uber has been making its finances, at least a lot of them public, for quite some time, or rather giving them to reporters and to investors for a while. So while its losses are narrowing, its revenue is also growing, but at a much slower pace than Lyft. If you remember, Lyft's revenue doubled in 2018 from 2017. Uber's we're seeing is up 43% in that same timeline. I'm also just going through it right now, but one of the first things I did, guys, was Control F and go to the risk section, and something caught my eye here. We have incurred significant losses since inception, no surprise there, including in the United States and other major markets. We expect our operating expenses to increase significantly in the foreseeable future, and we may not achieve profitability. Remember, this is what Lyft grappled with throughout its entire roadshow, and after trading, it's this path to profitability that investors have so many questions about for the ride-sharing companies in general. So you're seeing Uber hit a similar sentiment here, and this is going to be a major sticking point. I'm going to keep going through this, guys, and I'll bring you more as I get it. There's certainly lots to unpack here. We're finally getting numbers for the first time on Uber Eats. So remember that Uber, when we're comparing the two, be careful, because Uber Eats as its platform core business includes Eats and ride sharing. So we'll break that down. We're going to look at some of the other risks and some of the biggest shareholders. We already have a few names. Let me just tell you who we're expecting to see. SoftBank, of course. Masa-san made that gigantic investment. Benchmark, a VC firm. Travis Kalanick, Google Capital, Alphabet, Ryan Graves. So we're going to be looking for these names, and we'll bring you them as we get it.
Dara Khosrowshahi, of course, is the CEO of Uber, and he joins me here. You're in the news today because there's a report that earlier in the year, Warren Buffett approached you about an investment. Bloomberg says $3 billion. And then Warren did comment later on to us, to our Becky Quick, saying, I'm a great admirer of Dara. Some of the reported details are not correct, but it's true Berkshire had discussions with Uber. What were those discussions?
I don't want to get into the particulars necessary of those discussions, but like Warren said, we did have discussions, and I don't think the reporting was entirely accurate. Listen, Warren Buffett is an investor who has the ability to have his choice of investment in the universe, right? It's his brand, his smarts are unparalleled. And what I'll tell you is that I'm a giant fan. I'm like a Warren Buffett fanboy for many, many years. And one of my business goals in life has been to get Warren Buffett to invest in something that I'm involved in. And so far, I've failed. So maybe one day I can convince him that, Tom's will be right. He would be willing to honor us with an investment. It hasn't happened. And, I think Warren can invest anywhere, anytime. We are a company that has, as you know, an enormous growth trajectory, but at the same time, it comes with considerable risk. So I don't think that we necessarily fit in with the typical Warren Buffett investment. Maybe we can be a different kind of an investment, a portfolio diversification play for him. But, you never know what can happen, and I certainly would welcome any kind of a dialogue with him. It would be an honor. We didn't get there. Could we get there at some point? Maybe, maybe not.
The reports frame it as Uber's cash position is good. You got new term loans coming online, got the investment from the SoftBank consortium that you don't really need. You're not hungry for liquidity at the moment.
Not at this point. I mean, we are in a good position in terms of the company's profile, in terms of profitability. Margins continue to get better. We have a very strong balance sheet. And I do think that we are on track in 2019 for an IPO. Lots of things can happen in the world, but we have a reasonable buffer as well. So I think we're in a pretty good spot. That said, we would welcome strategic investment. It's just not something, it's not first priority for me right now. First priority is to continue to build a management team, continue to invest in the brand, and get us in a position where we can build a big business and along the way go public.
Or is it more about eats or autonomy or areas that are, I don't know, growing faster but not as big?
I think that with a company of our scale, you can never take your eye off the core, and so we have to drive that core business, the ride-sharing business. And now the markets that we're in, the core markets, the U.S., Europe, Latin America, India, Middle East, Africa, etc. So you really have to keep your eye on the core. But when you're involved in the transportation marketplace, this is a $6 trillion market. It is such an enormous market to go after that you have to keep your eye on the core, but you also have to be making investments, forward investments. Eats for us is a big forward investment. It's growing incredibly quickly, gaining very significant share in the food delivery space. We got into Jump, which is e-bikes. We are now investing in what we call Uber as a platform, which is we're not necessarily just about taking a car from point A to B. We want to be there anytime you're going from point A to B. We want to be there for you, whether it's taking a car, whether it's taking a pooled car, whether it's taking a bike, whether you should walk, or even now, we want to build out the capability for you to take a bus or a subway. We want to be the A to B platform for transportation and the biggest one on earth.
Do you think that that kind of innovation is going to show itself first in the U.S., or is China more ripe for at least the autonomous part of all of that?
Well, I think that the U.S. and China are going to play a part, and I think it's going to be a race.
You do?
You know, everything that you're seeing in the technology space right now, I think the innovation that you see in China is extraordinary. And the innovation that you see in the U.S. continues to be incredibly rich, entrepreneurial, et cetera. And I do think it's going to be a race. It partially is going to have to do with the amount of innovation and the core pure tech out there. But it also has to do with governments and governments allowing this kind of innovation and experimentation to happen. So I think it's too early to call right now, but it's going to be fun to watch. And we're certainly going to play our part in the autonomous space as well.
Well, you're leading right to the big conversation here at the conference, which is the balance between regulation and innovation, and
yes.
whether or not governments that lean more heavy on one end give up something in exchange for the other. I mean, we've seen examples. We've dealt with this, right? The UK, eyes remain on the UK. So
yes.
How much of that do you think governments recognize, and are they in some cases self-defeating or destructive?
Well, listen, there's no such thing as a free lunch. And I think that government regulation is going to increasingly have to play a part in the technology space. Because we're becoming a bigger and bigger part of people's lives. Because we're becoming a part of everyday life. And for example, where we play in the transportation space, this is fundamental to how people are going to move. And I think it's important for the cities and the governments that we operate in to have a voice in that. And we are changing how we work with governments. We want to be a partner with them. And for example, we have a program where we are sharing data with the cities in which we operate in as it relates to traffic flows, because the demographics are unmistakable. 50% of the world's population lives in large urban centers now. That's going to move to 2/3 in 30 years from now. More people are moving to urban centers. Infrastructure is not going to be able to keep up. So first thing you have to do is you have to be smarter about movement around the city's traffic, around the cities, et cetera. Second is you have to get single people out of cars. And this is where ride sharing becomes very important, but it also becomes where pooling, getting multiple people into a vehicle becomes incredibly important. And we're investing hundreds of millions of dollars in essentially cutting prices in order for more and more consumers to share rides, because it's not something that, socially yet is acceptable. And now we're innovating into new ways of getting around, which are e-bikes, for example, with the Jump deal. And we hope to bring e-bikes all over the world so that if you're going to be a single traveler, at least take a bike. And these e-bikes, they make you feel like Superman. I mean, it's amazing how fast you go, how easy it is. And further on, we do want to help these cities in terms of their bus service, or bringing demand to their bus service, or bringing demand to their metro. So it's a whole host of efforts that we're making. And then the real kind of forward push for us is actually taking it to the air, which is if you have cities going three-dimensional, high rises for residential, high rises for business, you're going to have to add another dimension to transportation. Elon Musk wants to go underground. We're going to hopefully make overground work, and we'll see which one works.
We've seen some of the videos and the prototypes, and
yes.
People look at it now, and it seems fantastical. Do you forgive them for that? Do you forgive them for saying this in a couple of years?
The amazing thing about technology is that what seems to be fantastical becomes normal and then becomes rudimentary. I mean, listen, the idea that you would push a button and have a car show up in 4 minutes 7 years ago, you say, that's amazing. Now, if the car doesn't show up in 4 minutes and shows up in 5 minutes, you're like, that was a minute late, I can't believe that. Right? So it's amazing how the fantastical becomes normal, but these are big bets that you have to make. They're experimental. I'm not saying that any of this is going to be easy. It's going to be very difficult. We have to approach it through partnership. We're not trying to do it ourselves as it relates to Uber Elevate. We're bringing a number of partners that are investing in this technology, but we think a combination of battery technology, combination of compute, et cetera, make this possible, and we want to play a part in really solving this issue of urban mobility, not just next year, but 3, 5, 10 years from now.
Dara, thanks for the time.
Happy to do it.
Look
Thank you
forward
for
to seeing
having me.
your presentation tonight on stage.
Appreciate it.
Well, that's it for Uber. As soon as I get more information, I'll be sure to update you guys right away. Let me know what you guys think about this IPO, whether you guys are interested in investing in this company or not, and give me your reasons why. If you guys enjoyed this video, don't forget to give me a thumbs up. And if you're not subscribed, don't forget to hit that notification bell, smash that subscribe button. I'll see you guys next time. Bye-bye.